Credit, credit, credit. Some people tell you don't get any credit. Other people tell you credit's amazing. What are we to think? Well, I mean, credit is basically just like the ability to borrow money with the promise that you're going to pay it back. With interest, of course. Now, you might need credit to purchase something, a service, a product, a house, a car, right? Something you can't pay for immediately. And credit comes in a lot of different forms, but credit cards, a mortgage, a car loan, student loan, and you got to apply for credit. And the amount you're authorized to use is usually determined by whoever you're going through, like a bank, mortgage company, but it's based on your personal financial history. And having good credit makes it so much easier to do so many different things, right? Renting an apartment, buying a home, buying a car, right? Sign up for a cell phone plan, get a student loan. With good credit, you can even save money in the form of lower interest rates or waived fees and down payments when setting up utilities. So, when we're talking about, credit, it's used for so many different things, right? As long as you keep up your payment history, right? Now, your credit report and credit score are two ways your access to credit is defined. Your credit report contains a history of your financial behavior, as well as personal information, your employer, current address, previous address, right? And the report lists a whole bunch of different stuff. The number of open credit accounts you have, right? Along with their current balances and how much utilization you have on them, that also have your payment history. That could include late payments, missed payments, right? They really want to see how good you are at paying back the money you're loaned, right? Now, loans you've taken out and the remaining balances still on the list too. So you'll have your credit cards on the list, car loans on the list, mortgage loans on the list, everything. Everything is on there. Any financial disruptions as well. Think you had a foreclosure, you filed bankruptcy, it's on there. Now, financial institutions can report your activity to some or all three of the major credit bureaus. Equifax, TransUnion, Experian. Those are the big three. Those are the big boys. Now, each bureau produces a credit report that you can access for free. There's a website you can use called annualcreditreport.com. Right? Just go there, check your credit report for free once a year, and you'll be good to go. Now, monitoring your credit report and looking for discrepancies is a habit you want to make. It's a habit you want to start, I promise. Because there's a lot of times where you'll be like, I know I paid this, and on there it'll say that you missed a payment or the payment was late, and you'll be like, it wasn't late, right? And you can get that taken off, and it might boost your credit score. Because if you find an error, you dispute it, and then if the investigation is ruled in your favor, you're good, right? It's going to have a positive impact on your credit score. So a missed payment or a late payment, what if it affects your credit score 5, 10, 15 points? That could be a fair bit of difference in the interest rate that you get on your next loan, right? Your credit score is going to be a 3-digit number, right? All the way starting at 300, all the way up to 850. Now, it distills your credit history and other components of your credit report basically into shorthand used by financial institutions to determine your credit worthiness, like how much credit you should get. Now, there are a bunch of different types of credit, right? But there's two main big ones, two popular ones. You've got revolving credit and installment credit. Those are the two big ones. Now, revolving credit is basically a type of credit typically issued in the form of a credit card. Users are given a credit limit, but can spend as much or as little up to that amount as they want. Balances are paid off in full or in part each month, and any remaining balance is carried over or revolved to the following month. Now, credit cards are different from charge cards, which is another type of credit, where the balance must be paid in full each month, right? That's a key difference there. Then we have that installment credit. This is, usually think of it as a form of a loan. Borrow payback in steady increments over time. So we're thinking student loans, car loans, mortgages, stuff like that. And then we have basically your service credit. which is a type of credit that describes contracts that you enter into with service providers, right? Utility companies, membership services. Now, these companies provide the service, and you sign a contract to pay them after the fact. Your cell phone plan, electric bill, gym membership, all these things. Now, how are we going to build that credit? Right? We gotta. If you don't have any, we gotta start somewhere. It'll be much easier to build your credit if you don't have any. You start from scratch. But if you are, even if you already have credit, we can still build it up. It might be a little bit slower, but we can get there. So, one of the first strategies is, if you don't have credit but you're looking to build it, you can become an authorized user on the account of a trusted family member or spouse who has a long, responsible credit history. By having your name attached to their line of credit, you can reap the benefits without worrying about the responsibility of payment. Now, if you can't get a credit card because you have limited or bad credit, you could always get a secured card. Now, these cards require an upfront deposit, and lenders can take that deposit back if you don't pay the balance in a timely manner. After you've established a history of paying on time, you could look into upgrading to an unsecured card. We could also try a credit builder loan. Now, this is where lenders, generally like community banks and credit unions, hold the money you pay in an account until the full amount is repaid, then release it back to you. Now, what if you have credit, but you want to strengthen that credit score? Well, you just want to make sure that you're paying on time, right? That's a big one, right? Make at least the minimum payments to avoid being hit with a penalty for a missed payment. Now, usually some people will say, pay 2 times the minimum, paid in full, and that's fine. You can do that. But at the very least, minimum payments every time. And then you want to keep your credit utilization low. Usually about 30% is good. Less than 10% is ideal, right? So if you have $1,000 credit limit, you want it to be under $300, preferably under $100, right? But at least under $300. That's kind of where you want to stay. So if you build it, if you pay up to $500 in credit, you want to at least pay, a little more than $200 to get it back down to $300 at least. Now, credit accounts that you have open, you need to keep them open, especially your most long-standing accounts. Your credit history takes into account your average age account, so it's a good idea to keep your first credit card open, even if you don't use it much now, or if you don't use it at all. And don't apply for too many lines of credit at once, right? If you're going to apply for a credit card with at least 6 months apart, right, between each one. You gotta be real careful with it. So if you're gonna build your credit, make sure you do it the right way, right? Go slow. Pay. I recommend you pay it in full, but if you can't, make sure you don't go over 30% of your utilization, right? And use it as frequently as you feel comfortable doing. Don't be pressured to think that you need to use it a bunch so that you can pay your score back. Also, don't use it a bunch and get into a bunch of debt because you can't pay it back in full. Interest will keep you paying forever. So, really get in the mindset of getting your credit up because you need it. You need credit to buy stuff. And unfortunately, that's the truth. Unless you make a lot of money and you can pay for whatever you want in cash in full, you need credit, right? So go out there, get you a credit card. Be responsible, right? Don't listen to these people who tell you credit is evil. It's not evil. It can be bad for people who are irresponsible, right? So let's be responsible out there. And while we're being responsible, why don't we like this video? Subscribe to the channel. It's free and I'd appreciate it. But till I see you guys in the next one, y'all be safe.